financial markets, cryptocurrency, gold and silver, world news.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial turmoil explained.
Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 21st of March, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, let's get started. Let's open up the charts right here and take a look at what's going on. Gas prices in the United States have went up recently, very high, And you know what it's doing? It's changing the way people drive. Gas prices, without a doubt, changing consumer behavior. Says drivers around the nation are beginning to shift their driving habits in response to soaring gas prices, as the White House attempts to present the pain at the pump in a full context. It's not just in the United States. Every country has seen these suddenly. Their fuel is costing like 1/3 more than it used to before. It's went up by a lot. Let's put it this way, a big bite at the pump. And especially if you're filling a big vehicle or whatever, a lot of people's cars are not fuel efficient. A lot of people don't have electric cars and stuff. And they have to suffer when they go to the pump, and big time. I mean, it's like, I remember a time, when people go to the pump, and my grandfather, he used to only buy like $2 worth of gas. Say $2? Yeah, but it was back when $2. Let's see. It was back when gas was like 18 cents a gallon or something like that. $2 bought him like 10 gallons of gas. So now, 10 gallons of gas would be like what? $70 or something, $80, $75 would be like him buying $75 now. So $2, I mean, this is what they've done to our dollar. This is what these elected officials have done. They've cut our dollar, and it's going to get worse. It's getting worse. And, ever since what's happened in 3 occasions here, there's been what happened here in Canada. They seized people's bank accounts. In Cyprus, they started this. They started this business. It's called a bail-in. Instead of a bailout of the banks, they do what's called a bail-in. They just take your money. That's when they started. It all started in Cyprus a number of years ago. It was a test run to see what the people would do if they just take your money. And arbitrarily, they can just come in, and the banks are basically working in with the government. And that's not, your money is nowhere safe anymore. Here in Canada, they seize the money. And now over in Russia, the Americans have seized the Russians, what do they call it? What it's doing is it's around the world. Doesn't matter what you are, it's always a third party, what's called a third party. So in other words, you have your money, and the banking institution has your money, and then there's a third party, right? And so money should be focused on one party only. You have your money. It's in your hand. It belongs to you. And whenever you do a transaction, nowadays, you go into a store or something, that's a third-party transaction, meaning that the store owner and you should be where the money changes hands. In other words, you're one party, the store owner's the other party. He takes your money, he gives you the product. In this case, what's happening now is there's a third party in there. When you slide that card through that little machine, you push the buttons on it or whatever, or you do the little beep on the card, with your card, that signal goes to the bank, which is the third party, and the bank then sends a signal back called approved. You've all seen it on the thing. It says approved. That signal that comes back from the bank, says approved, is controlled by the bank. It means they control your money. It means that Someday you might go in there and you might slide that little card across because you desperately need something. Maybe if you don't get it, maybe you're going to go hungry. Okay, whatever it is that you're buying. Maybe it's food. And it's going to go beep, not approved. And you're going to say, why? Well, it's because the banks seized your money. And for what reason? It could be anything. Because now they're allowed to seize your money. They've set precedent by doing it. They've done it. And now they've set precedent. That's called setting precedent. Now they can do it for whatever reason they want. I don't know what the reason would be. They make up a reason. Then you got to fight against to get your money back. You got to fight against that reason that they put in there, whatever the heck it is, that they took your money. And good luck with that. So basically, you're hanging it high and dry. You're not going to get your food. And do they really care? I don't think so. Anyway, how did I get off on that? Because right now we're talking about drivers across the nation are feeling the sting. They go to the pumps, and I mean, you pump in, like nowadays, you pump in $20 or $30, and your needle doesn't even move on your vehicle. The guy goes in, he got a half a tank. He says, I'm going to top her up, and so he pumps in $30, and it only goes the needle just budges between half and three quarters. It doesn't even go up to full. What the heck is going on? It's them. They're doing it to us. They're doing it to us, and they've got us in a position here, a position we can't get out of, and we can't fight back. I mean, we can't do anything. We just got to take it as they do it. And they're just, they are just like, oh my gosh, they are really giving it to us for everything they're worth. And we were the ones who got them in power all around the world. Doesn't matter what country you're in. The people allowed them to get into the position of power so that they can rake you over the coals. It's just basically the way you want to put it, Anyway, that's what's going on. Gas is going up like crazy. And here's another thing. Wheat farmers out there, Wheat prices went boom up, right? So you think all the farmers will make some profit? No, sir. No, sir. It's all being held within Wall Street. The farmers are going to have to get the old price. And they're struggling out there. They got to get planting done and stuff. They need the money now. No subsidies, not yet anyway. Wheat farmers are having a hard time. But the guys who are getting the money are the big shots, the middlemen. The middlemen. This is why the old guys, they used to say, a couple things they used to say. Probably heard it before. Like last generation that came through World War II and stuff, they used to say, never trust a banker, they used to say. The second thing they'd say is, cut out the middleman. That's what they used to say, because they're crooks. The middlemen are crooks. Anyway, getting right in there, let's take a look at the gold price today. It's up $13, $19.35. This thing is really, it's one of precious metals are suffering back. They have not caught the wind of this, of everything else going up. Everything else has gone up massively in price, and they're lagging behind. And this is due to suppression. The suppression is still ongoing, guys. There's at least 4 big giant bullion banks out there that are leading the way in suppressing the price of gold and silver. And they're continuing to keep that price down on gold and silver. $19.34 for gold. Let's take a look at silver. Doesn't matter that they're almost out of real metal. In other words, there's a shortage. There's a shortage right now. I mean, if a billionaire wanted to buy himself some real metal, he'd probably clean out the whole thing, especially with silver. Silver's up 27 cents, so I'm talking if you wanted to buy real metal, not a bunch of paper. They got all the paper you want. You're a billionaire. You want to buy silver? ETFs, futures contracts, no problem. They can give you all the silver you want. Let them supply the real metal, though. That's another story. 25.25 for silver today. Now let's get in there and take a look at cryptocurrency today and see what it's doing. We're looking at 1867, and crypto is at $40,942. I'll tell you guys what about this Bitcoin is. I forecasted a few days ago, and I said that the bear market that we've been in saw the price cut in half over the last number of months is coming to a close. In other words, your buying opportunity in crypto is coming to a close, and it's getting ready. It's getting ready for another big bull rally coming in cryptos. But there's this little thing going on with the Fed right now, and they're making these rate hikes on the overnight rate and the short end of the yield curve, and they're for the Fed right now, it's just like eating potato chips. You can't eat just one. And so, they made a 25 basis point rate hike, and then they're going to make a couple and more and more and more, and they're going to keep going with that as this year progresses. And they're going to get as many in as they can, and it adds up. So it'll start to add up. It's going to start to cut into the housing market because and car sales. It's going to start to cut into car sales, and it's going to start to, in general, slow the economy down. That's not good news for the stock market, because the stock market is over leveraged, but it's less over leveraged now than it was like a year ago when it was at the same price as it is. Let's take a look at the stock market. It's down 149 today at 34,605, but it hasn't really went anywhere. It's been hovering between like 33,000 and 36,000 for like the longest time now. Well, if we go back about a year ago, when it was at 34,000 like it is now, it was actually higher than it is now because you got inflation. You've got over the last year, by the measure of the CPI, you've got about a 7-point-something inflation rate. 7.9, I think it is? That's by their metric. You go by somebody like John Williams at Shadow Stats metric, it's double that. And so let's just say the real rate of inflation is over 15%. This means that the stock market's lost 15% by staying at the same price over the last year. See what I mean? So the bubble is deflated by like 15% in the last year on the stock market, even though the stock markets went nowhere, just because you're figuring in inflation of about 15% real rate of inflation. So that means the money that you got invested in the stock market, even if the stock market stayed the same over the last year, that money can purchase like 15% less goods and services. So the air's coming out of the bubble on the stock market. That's what it actually means. By about 15%, which is they consider to be that's a pretty big correction. 10% is a correction in the stock market. 15% is a good-sized correction in the stock market. So we've already had a correction in the stock market over about the last year because it hasn't went nowhere. Stayed about the same, more or less. Anyway, I'm rambling on here a little bit. Let me move on and take a look now. Oh, the stock market, 34,590 today. Let's take a look now at crude oil. It's 111. Now, see, crude oil's been taking advantage of what's going on out there. Its price is what the free market's determining it should be. It's not the case with gold and silver. And so gold and silver should have went up as much as crude oil has. Let's say gold. Let's pick gold, for instance. If crude oils went that percentage up, like it was like $40-something there, and now it's 111, okay? Let's figure that same percentage movement into gold and to see where gold should be. Gold was like what, at around when that started. When crude oil was $40, I think gold was what? Was it like 1,600 or something like that? Now it's like 1,900. It's moved a little bit, but percentage-wise, it hasn't moved this much. So gold probably should be, if it's been keeping up with oil right now, you probably would have been looking at about $2,300, $2,400 gold. I would think, if it was keeping up with oil. So gold should be like 2,400 right now, at least. That would be minimal. It probably should be more like 2,800. And, silver should be getting up around $50 or higher by now, if it was a free market. But we see the exertion of these four big billion banks keeping it down. They're not going to be able to do that forever. It's going to come to an end, and they're going to have to. It's going to explode to the high upside, gold and silver, because when these bullion banks can't do that anymore, because they're out of metals, and what that's going to mean is that the retail invest side of silver and gold, the retail sales side, they're going to be out of metals to sell, because they're going to divert what's metals are left for industry. So you're not going to be able to buy it, right? And the price then is going to shoot up, because it's only going to be being supplied for, especially silver I'm talking about here, for industry only. And so you'll be able to sell your silver, but you won't be able to buy any. And there's going to be all kinds of places that are going to pop up. When the gold and silver price goes up big time, enormously, going to be all kinds of buyers are going to pop up out of nowhere. We buy gold, we buy silver. They're going to be wanting it, because there's going to be a shortage and barely enough available for industry. There's going to be tremendous demand. And so they'll be buying but not selling. You won't be able to buy, but you'll be able to sell. That's what we're headed toward anyway. Let's take a look now at the crude oil is 111. Let's take a look now at MOVE Index 91.77. Saw a little peak in the MOVE Index there, but settled back down again. Let's take a look at bonds. We're seeing yields go up today. Looking at 2.24 on the U.S. 10-year. Now, it's right on the mark, what I told you guys, that I thought they could withstand. And evidently they're withstanding that. 2.24, it's 2.5 on the U.S. 30-year. So bond yields are going up on the long end of the yield curve, and they're going to be going up on the short end too, because the Fed's raising rates. What are higher rates going to mean? Well, it's going to mean a big deal to the real estate market. I can tell you that much for sure. And they're starting to get up into that territory. How high can they let them go? I mean, they have to service the United States debt as well. Just going to add an extra burden on the amount of. But I think they're to the point where soon, if they're not there, they're going to be there soon, where they don't really care anymore how high the U.S. debt goes. I mean, if you can get away with it, I mean, picture if you were a person that had credit cards or whatever, and a credit card company extended you unlimited amounts of credit. A credit line of like $1 billion or $1 trillion credit line. And at a certain point, say you was using those credit cards, and you kept racking up higher and higher debt to them and owing them more and more and more money, but they continued to extend you more and more and more credit. At a certain point, it would become meaningless to you. Like, once you owed like $50 million to them, and they were offering you more credit, you just keep living off the credit. And this is where they're at right now with the central banks and stuff. They've got such a huge pile of debt already, and more credit is never ending. The credit amount that they got on the other side is never ending. They can keep climbing that ladder of credit. They can't back down now. They got too much debt. In for a penny, in for a pound. And so they're just going to keep climbing that ladder, and that's going to keep destroying the purchasing power of the dollar. This is a vicious cycle. It ends in a hyperinflation. It's not that long away either. And so we're seeing this is going to move it faster. When the price on money basically goes up like it's going up now, This is going to move it faster and increase the inflation, but continue to destroy the economy, the general economy and the real estate market and everything else. What a mess! Let's take a look now at the U.S. dollar index at 98.29. And it's up and down today. There's a bit of volatility, but it's just basically going along sideways today. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.